Investing in property is a pain in the backside, let's be honest. Trying to find a good deal, getting the deposit together, doing any renovations, finding a tenant, or even just trying to resell it on again takes lots of time, lots of money, and there are plenty of hidden costs to worry about too. So what if there was a good way to invest in property and get the same exposure without having to do any of the legwork or stress about a leaky roof? Well, this is where our friend the REIT comes in. It stands for Real Estate Investment Trust and has been a formalised investment class in the UK since 2007 when the legislation was passed to form them. In short, a REIT is an organisation that invests in the property market across various different sectors, which could be commercial, retail, residential, or even areas like hotels and lodgings. But one of the best parts about this is that they're tradable just like any other share on the stock market. So they allow you to become a property investor from the low price of a single share in the company. In the UK, we've got over 50 different REITs listed here, which is a lot more than I actually realised, and they range broadly across all of the different sectors. Most REITs listed here focus on the industrial and office space, or the diversified space, meaning that they have multiple sectors included in their books. You can invest in anything from shopping centres to student accommodation and pretty much anything in between. In this video, I'm going to run through several different REITs, show you what some of the biggest and most popular do. I'll look at some of their high-level credentials, their dividend yield, how often they pay out, and their ticker symbols too, so that you can add them to your own watch list or add them to your own portfolio. For full transparency, I don't own any of these REITs at the moment. I have no exposure currently in this space. At some point I'd like to, and I think they're a great inflation-beating hedge and a dependable form of income, especially as they have to pay out 90% of their net income by law. And we know that property has typically been a great long-term investment here in the UK. Firstly, let's take a look at British Land. The clue here is in the name, as you might imagine. The company's been going for quite some time and was established back in 1856. They own and operate commercial property all over the country, but have most of their assets in London. They have office buildings, retail spaces and campuses with a total current value of £12.7 billion. And they manage a space with a total combined area of 21.5 million square foot. Now let's look at some of their key financials, because as you can imagine, the last couple of years have definitely been a challenge for this company as workers have been stuck at home, offices shut down or moved indefinitely, and also retail being locked down heavily. If we take a look at the charts, over the last 10 years, you've actually seen a capital growth of -8% in this company, and in the shorter timescales, things don't look particularly amazing. Only 3% growth on the year chart. If you do zoom out all the way in maximum, you'll see how these companies' stock flew just before the property bubble. Now, after that burst around the financial crisis time, things went downhill from there. However, capital growth with the REITs does not tell the whole story. We're here for the income and the reliable dividend payments. So let's see how they've done on those. They pay a semi-annual dividend. It used to be quarterly, it looks like they've changed that slightly. So that's twice a year, and the current yield is a very healthy 4.9% based on today's prices. However, we did unfortunately have to take a hit over the last couple of years with the challenges in the market. You'll see here, if we take a look at the dividend history, that we got paid nothing during July of 2020 as the world went into lockdown. Not great if you are relying on this, but then as always, this is a reminder that you never want your portfolio to ever be reliant on a single sector, a single stock, or a single region of the world. The rules still apply here with REITs. Diversify your holdings to protect yourself against everything, and all will be well again in the world. Taking a final look at some of the financial statements, and we are reminded that the company has had a challenging time over the last couple of years as they have posted a loss overall of their net income. But because they're in the property business, they do have some significant assets, i.e. their buildings, which they do provide them with much larger assets than their liabilities. Anyway, that's British Land. Take a look at the company in a lot more detail if you're interested. There is still a lot of recovery work here to do. Clearly, there's a lot of nervousness about the new variant of CV, as well with people not returning to the offices and staying at home. Worth adding to the watch list. Next one on the list, I wanted to pick Unite, just to highlight the differences and diversity of what you can do with different companies in the REIT sector. This company was founded in 1991 in Bristol and focuses on providing student accommodation in the university sector all across the country. They provide homes to 76,000 students across 177 properties in 27 leading university towns and cities. Now, can you spot the issue that they may have had over the last couple of years? Very similar to what I've just seen with British Land. Unfortunately, due to the lockdowns, the company has definitely struggled to make profit over the last couple of years. In fact, they've got negative earnings in both 2019 and 2020. During this period, they've also had to cut their dividend payments, but things are starting to look better on the trailing 12 months, We are seeing some net income and positive cash flow. So long as students get back to the university, this company will likely have a relatively stable income, as there is almost no choice for students during their first terms in where they stay. Current financials give this company a dividend yield of 2%, which is certainly not very exciting compared to the rest of the property sector. But we do need to remind ourselves that they have been hit very hard, and without students providing their income, they have nothing else to fall back onto. Again, this one could be another to add to the watch list. See how they're able to recover over the next couple of years, and then maybe get yourself in once you're comfortable. As let's be honest here, as long as students are going to university, which is virtually a dead certain prediction, you can have them paying some of your stable income, unless of course 2020 happens again. Okay, on to one more option for you. This REIT is called Tritax Big Box. Compared to the last examples we've just run through, this company actually benefited from what happened over the last couple of years, as they specialise in investing into commercial properties which warehouse goods to the big box suppliers. Basically, if you sell anything online, need a warehouse space to hold your products, or need a distribution hub, it's likely that you will need to lease a property that's owned by this company. As you can imagine, online retail has been steadily growing over the past couple decades, but took an even larger leap over the last 18 months, helping to push the net income of this company higher than it's ever been before. It currently has a market cap of £4.5 billion and dividend yield of 2.71%. In the past year, this company has grown over 50% in terms of capital, and over the last 5 years, you have a growth of 83%. Don't forget that does not include those healthy dividends, so once you factor those in, you've got a real market-beating stock here, especially when you compare this to anything in the UK market or the FTSE All-Share Index. One thing I noted with this company, taking a quick look at their balance sheet, is that they have quite a lot of equity in the properties that they own. Without looking in too much more depth, I'm going to guess that this is because of the appraised value of warehouses and large distribution spaces in the UK. But then also the fact that I can imagine it's relatively cheap to build warehouse space, at least compared to offices in prime city centre locations. So if we have a look at the latest figures, we can see that they have £4.4 billion worth of assets and then only liabilities of 1.485, meaning that they have about debt to around 30% of their total assets, giving shareholders a nice chunk of equity in case everything has to be sold in the event of a downturn in the economy. So overall then, this is probably one of the REITs in the best place financially that we've seen, and in the market, which is a pandemic proof if you like. Online retail is not going away. Companies need more space to sell their goods. You always hear on the news about how warehouse space is in demand constantly. We must not forget that in the UK, land is always going to be in high demand, as we cannot create more of it on this relatively small island. This one could be a great long-term play, but the proof will be in the pudding to see if they can maintain their performance into the future as people get back to normal and maybe head back to the high street. But I don't think online retail is going anywhere, let's be honest. Who likes going to the shops, pushing past crowds of people and getting stuck behind a buggy with crying triplets? Feel sorry for the mum. Remind me never to go to the Trafford Centre ever again. There are loads more REITs out there, as I mentioned earlier. I'll leave a link in the description below of all the REITs that are UK listed, and a link to the largest REIT sorted by size order, so you can take a look for yourself. The number of REITs definitely surprised me, as I always assumed there was just a small handful and you had to look abroad to get more exposure to the sector, but I was definitely wrong about that. I'd be really keen to understand if anyone currently invested in REITs inside their current investment portfolio. Make sure to drop me a comment below and let me know what you're invested in, or if there are any other potential interesting ones, maybe I could look into it in the future and maybe even add to my own portfolio soon. But anyway, let me know down below. Either way, I hope you found the video useful. Make sure to drop me a like if you found the video interesting. Subscribe if you aren't already for many, many more videos. And as always, I'll see you in the next one. Happy investing.